program is a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com or search for Options Insider Radio in iTunes. And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block. With your host, Mark Longo from theoptionsinsider.com and co-hosts Mike Tosaw from KnowYourOptionsInc.com and Mark Sebastian from OptionPit.com. The Option Block is brought to you by Options Express. Don't spend time worrying about your broker. At Options Express, security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets, established financial stability. Options Express lets you trade with confidence. Stocks, options, and futures, all in one account. Trade with a specialist. Visit optionsexpress.com/OXradio to open your free account. Options Express is a member of FINRA, SIPC, and NFA.
All right, and that rocking music means it is time once again for everyone's favorite options program. Yes, of course, I'm talking about the Option Block, your bi-weekly source for all things options related. My name is Mark Longo from the OptionsInsider.com, as well as the ever-expanding, ever-enjoyable Options Insider Radio Network. Speaking of expansion, if you haven't had a chance to check it out, surf on over to theoptionsinsider.com. You'll see in big, bright, bold letters the launch of our new show, the Options News Rundown. It's kind of like the trading block in a short 5-minute synopsis. The top 5 headlines from the day as curated by our expert team over at theoptionsinsider.com. I'll give you a nice little snippet to start your day about what the big news is going on in the world of options. Of course, you can find it on iTunes, Stitcher, TuneIn, AHA Mobile now, so you can get it in your in-car, in-dash systems, pretty much anywhere finer podcasts are purveyed. Check it out, the Options News Rundown. Speaking of checking things out, of course, while you're at our website, surf on over to theoptionsinsider.com/events, or just click on that events tab at the top of the page. You'll see there in bright bold colors as well a breakdown for our upcoming Unusual Activity Forum in Chicago. If you like our Odd Block segment, where Andrew and I and the rest dive into some of the more nefarious and interesting and intriguing options activity, well, in this show in this event, I should say, we're going to break down for you exactly how we find that stuff, the different roadblocks and problems that are inherent to looking for that stuff, the different systems and tools and techniques we use to find it, and then once you find it, what you can actually do with it and some of the mistakes and problems people encounter when they're first trying to use unusual activity, and some of the ways the pros really use this activity to trade and cue their trades from. So it should be great. It's going to be a great half-day event. We're going to do a floor tour, a bunch of other great freebies thrown in for everyone who registers. We got it down to as cheap as we possibly could and still have it in a live venue, of course, at the SIBO, $99. So surf on over to theoptionsinsider.com. Get there quick because the spots for the floor tour, if you want that, are going pretty quick. So surf on over theoptionsinsider.com/events, and we hope to see you in Chicago on March 27th at the CBOE. All right, and without further ado, allow me to introduce the rest of the all-star panel. Starting off with the man who gets pride of place because he's beaming in from the farthest away. Of course, I'm talking about none other than Andrew Giovinazzi, the Rock Lobster, beaming in from the great state of Maine. Mr. Andrew, welcome to the show, sir.
I don't even know what to say. I'm all warm and fuzzy from that intro. I don't even know how to deal with that.
Andrew, rumor has it you may even be in Chicago for the Unusual Activity Forum. So it's going to be a great crew. Of course, Mr. Seabass will be there. A bunch of other great guys.
Yes, there will be plenty of odd blockheads running around that Unusual Activity Forum.
Maybe we'll even drag Uncle Mike to it, and he can sign autographs in the back or something.
Exactly.
Sounds like a big rave. The option rave is what it sounds like to me.
We're going to have the pulsing techno music in the background just to kind of make it feel a little more festive for the listeners. Of course, speaking of festive, that voice was none other than good old Uncle Mike Tosaw, who did an admirable job taking on the hosting reins for me last week. Thank you for that, sir.
Oh, always happy to do it. No, it's good to be back on the sidekick chair, though. I prefer being the Barney Rubble of this show, so to speak. There's only one Fred, and that is you.
I was going to say, you like your walks on the dark side, but I don't think you want to stay here for too long. I think you like a little bit of fire is fun, then you sit back in the much more relaxing seat, I think.
Well, it's your show, If we had the Mike Tosaw show someday, then maybe something like that we could do a little bit different. But on the option block, this is the synergy. This is the team. This is what made this show as great as it is. I'm not going to mess with success.
Don't mess with success. An excellent formula for life, sir. And speaking of life formulas, we have the man who's lived so much of it so successfully. He is none other than the Viceroy, beaming in over there from Options Express. Mr. Jacobson, welcome back to the program, sir.
Thanks. Not messing with success today. Another quiet day. The market's up and VIX is down. So the pattern goes on.
There you go. Alex has done a synopsis of the entire show for us. We can now go home. Thank you for that, Alex. All right, and with the team assembled and everyone ready and willing, we're going to dive right into the trading block.
The trading block.
All right, and those bells mean that it is time for the trading block, where we break down the day's worth of activity. And as Mr. Alex so concisely summed up earlier at the top of the show, it was indeed a up day on the broad markets and a down day in the VIX cash. So there we go, we're done. Now, most of the major indices closing up fractionally on the day, about 0.5% or so in the S&Ps, with the NASDAQ and Dow lagging behind a wee bit. And the VIX cash closing at 14.05 on the day, down, I won't even say the percentage because I know it'll blow Andrew's mind. I'll just say 1.31 points on the day. So the market taking a collective sigh of relief. Sequester stuff going on, not apparently really sidelining a day of rallies for the most part. I know, Andrew, we were talking prior to the show, and you were scratching your head a little bit at just how we're getting such a strong rally in the S&P and such a strong sell-off in the VIX cash with what's really going on in the world right now and in the marketplace right now.
Yeah, it was a little funky, I have to say. I thought we were kind of option pit. We were fading the Sequester, although there wasn't near we'll just call it edge in the market to fade it like there was in the fiscal cliff. So it was kind of like, I wouldn't call it a big fade, more or more like one pinky fade or something like that.
Add a new degeneracy to our show, the degenerate faders, because that's what you guys over there at option pit. There's never been a move you haven't faded.
Well, sometimes to our chagrin. But normally we have some kind of gamma, but this one was, and the thing was, basically we were mostly sitting on the sidelines and kind of seeing what played out. And I have to be honest, I think that I didn't think the Sequester was going to be a big deal, and it looks like any kind of pump up in vol from the market was sort of from that. Then you had the Italians with the hung vote maybe and all those kind of things. But, today there has been some realized volatility, and for the first time in a while, I think the market volatility, just implied volatility, is trading below realized, and in the SPY at least.
That is an unusual occurrence. We do our volatility views program all the time, and we're constantly, since we started that show 2 years ago, I've been just on and on about that implied versus realized differential. I think the times when the two have crossed, I can count on one hand, and so that certainly is a very rare occurrence.
So, and I think really is that the market's saying the Italians will work it out, and it just every kind of sell-off lately has been met with, some kind of buying. And I think the only thing that really kept the market from taking off this morning was the Chinese. The Chinese market is back below the FXI. At least I watched the FXI. I mean, it's the easiest thing to watch, and it's down for the year. So I'm like that looked awfully cheap to me. I bought a little today, but I am finding this market amazingly resilient, and even as late as Friday, we were like, we didn't think we're going to see 12% volatility anymore, but in the big index, but geez Louise,
Here
now
we are, staring at the
here
teeth
we
of
are.
12.
It is possible. I can't believe the market. Now, this to me really is the market saying the volatility buyers just getting like, you know what, we're not standing in the way anymore. If we really can fall, if the volatility really can fall back to there again, I'll be impressed, and I'll be more bullish than I am right now.
And as we all know, you are not easily impressed, sir. Takes quite a bit.
Yeah, but
speaking of setting new highs and also new lows, and sometimes simultaneously, Uncle Mike, two of your holdings were at opposite ends of the spectrum today. Of course, you've been talking quite a bit about good old Goog rallying to that 800 level. Well, it certainly met it and exceeded it, up another nearly 2% today to 821. So why don't we start there? What does that have to say to you? I know you've been watching that key level, and everything else is rallying. Google's rallying. Is it time for you to dive into Goog, or what does that say to you?
Well, I want it to be a little bit more stable, so to speak, at the 800 level, and it's shooting up a little bit too quick for my taste. If we test the 800 level again and maybe hang out around the 800 level, I'm going to have a hard time staying out of it. In terms of Apple, still tinkering around with a small little credits or debits, a 450, 500 May a call spread on it. And what I've been doing to combo it is selling these weekly put spreads. And this morning when we started going down, I didn't get into my weekly put spread yet. And as time went by, I'm kind of glad I didn't. So with that, I do plan on selling another put spread on Apple at a little bit lower level, possibly tomorrow, or I might even wait till next week. We'll just kind of see what happens with it. But with Apple, it's getting to be a pretty attractive level to get back into it again. So Google and Apple are both attractive to me now, but for opposite reasons.
Yes,
but
very
not
different
quite
reasons.
yet.
Apple, yeah, this keeps up in Apple. They're going to be talking about 3-handle again out in Apple. When's the last time you thought about that? We were just dancing with 700 not too long ago. Everyone talking about 1,000, and now we're talking potentially revisiting the 300 handle again here in Apple. So interesting stuff. So what's the plan for good old Goog? We talking 7.5, 7/4 put spread down the road if you hold these levels? Or are you getting even tighter? What's the plan here for getting into Google?
Probably something along those lines. I mean, I'm probably about 2 or 3 weeks out still is my estimate on it, and who knows, it might not happen, but I want to just see a little bit more of a stable 800 level first. But yeah, that's probably the first thing that I would look to is possibly doing a put spread or something along those lines to get into it, or maybe a combo, or we'll see what the market gives once it stops being so on fire. It's kind of like Google to me right now. It's like a fast moving train, and I'm trying to jump onto it and catch a handle without getting hurt somehow. And whenever I try to do that, I typically get hurt. So I want the train to slow down a little bit first.
Pull into the station first. Then you can climb on, or at least slow down around the corner. You can hop on like a hobo.
Right. Yeah, there we go.
There you
hobo
go.
Trading.
That should be your next webinar, the hobo execution strategy. How to get on.
Yes.
Get on like a hobo. There you go. I'm doing all your marketing for you. And how scary is it that we've been doing this show for a while? I know exactly where your mind goes when you're looking at getting into a new position now. I can just rattle it off for you.
I know, and that's what you don't mess with success. That's why.
And I was about to say, my mind started to drift. I'm like, let's see, let's look at that. What's that Tosaw, doing? I mean, think about it. Google was like 650 not very long ago. Everybody, just for anybody scoring at home.
We had a bet on the desk when I think Apple was 700 and Google was 700. We had a bet on the desk of which one was going to take out 1,000 first, and the bet was 50 push-ups. And as you guys know, I probably couldn't do 50 push-ups if I had 50 weeks to do 50 push-ups. But it's interesting.
One per day, Alex.
Yeah, well, maybe. Try to pick a bottom in Apple is taking a lot of lives here. They just murdered it today. I mean, they just murdered it. I was listening to the chatter off the trading desk, and the chatter today was premium selling in Facebook. It looks like Facebook is possibly becoming the new Microsoft with the exception of earnings week. And then it was Apple and Google. There was some chatter today about Mosaic and Potash, but it also was a relatively quiet day. But man, trying to figure out that bottom in Facebook and the top in Apple, there's going to be a lot of pain, or so far there's been a lot of pain. We'll see how it plays out.
I don't want to preface any of your Xpress Block stuff, but I'd imagine some of your Idea Hub is probably spitting out some interesting things in Apple land right around now.
Yeah, it's littered with Apple. Ironically, Goldman is coming up a lot, and the Russell is coming up a lot, but it's quiet. Idea Hub, even though there's still vol in some of these, the hub itself is still light. And we completed the design for the Futures Hub. In fact, on Friday we met with the Futures folks and completed that design. That business, since we adjusted transactions costs, has just been flying here. The Futures guys are unimaginably busy.
Well, it's good to hear. I know it's been a big initiative for OX for a long time, and a lot of brokers have really stumbled to make that transition from options into futures. Seems like it's been a much smoother transition over there in the land of OX.
Yeah, futures options is a real interesting area, but it's been almost a country club in a sense that it didn't have the broad appeal that the securities options business had, but people who got it. And now that the friction has come down, I mean, there's the catch-22. How much does it cost to trade, and what's liquidity? And both sides of the catch-22 are getting better in a handful of names. Even oil today, oil took out the low, and as Andrews talked about, a lot of color coming out of China. I don't want to go off on a tangent here, but I collect watches. And one of the things we kind of do in the watch world is we've been propped up by China a lot in the last couple of years, and a lot of stuff is leaving and going overseas. I can tell you in the watch world in the last 2 weeks, the bottom has just come out of it. They've probably knocked 30 cents off the dollar in value in the last couple of weeks. And it's all the China effect. And then you saw 60 Minutes this weekend. And, again, that didn't paint a really good picture.
Alex, I have this image of you by a fire in a smoking jacket, looking at your collection of various wrist watches and watch fobs and all that kind of fun stuff. Is that somewhat accurate?
Watches, not watch fobs. I also collect clocks, so that when we go to daylight savings time or leave daylight savings time in my house, it's about a 2-day job to reset everything. And many of them sing and chime. So my family hates me pretty much, especially on the hour. Quarter hour isn't so bad, but
do you have a nice little vest too with the pocket for the pocket watch? You can just pull it out and check what time the steam train is coming in.
No, they don't make vests in my size, so that's not a consideration. But the Viceroy hat, I'm thinking of putting a watch in there, so maybe.
There you go. I like it. Speaking of things that were just annihilated, we were talking earlier about Apple on the downside, but I missed the show on Thursday last week, and that's, of course, when you guys got into the teeth of all the happenings over at everyone's favorite Chicago, or should I say less than favorite perhaps these days, Chicago startup, of course, Groupon, taking it on the chin of late. And today they got down to about 420 or so, I believe, in the lows. I know these March 5 puts were trading 80 some odd cents not too long ago. They're trading 11 cents today as Groupon just on the upside today, up 6%, rallying over 50 cents from its lows on the day, but I know it closed up about 32 cents to almost 5.42. Just crazy vol, crazy price movement out there in Groupon land today. I really have no idea why this thing was up so heavily today, unless some people are just putting it on a pure spec. They feel they got rid of the dead weight at the top. Maybe that's going to clean up the situation. I don't see how changing the cheers at the top fixes the fundamental problems with that business and the fact that there are many deep-pocketed competitors nipping at their heels, but still a lot of activity going on. I know Grigas, we used to tease him, was playing in and around Groupon quite a bit. Hopefully he got out or perhaps doubled down at the 420 level. Mr. Andrew, Mr. Mike, I know Mike probably not playing with this one too much. Mr. Andrew, I know you like your Zynga. Any of that translate over to Groupon?
We had like a 1x2 on in Groupon, buying a put, selling 2 out of the money puts, which if I would have put it in the right strike or right term would have actually been a good trade. So that was a trade we had for earnings, and it kind of went down there real fast and back up. It almost sucked worse than we thought it would, which is pretty tough. because Mark has had the hate on it for a while. So it made a couple of bucks, but that's about it.
Yeah, so there's some opportunities out there, even for a cheapo $5 name, just, nearly $1 worth of price, actually over $1 worth of price move in just a couple of days. So substantial swings. Hopefully some of our listeners have been trading pretty aggressively and successfully, hopefully, out there in Groupon. I have to just point this out. I saw this headline today on Groupon and it just caught my eye. It said, "Is Groupon the best poorly executed idea ever?" I thought that struck at the core. That's a perfect way to sum up everything that happened with Groupon. It was a great idea. It was kind of timely. They got some great capital. They had some very patient VCs who turned out to make a ton of money on the Grouponzi scheme. I think everyone has berated this to death, so I won't go on about it. But of course, that $6 billion offer from Google a couple years ago, looking a lot more attractive right now, shall we say. Groupon, of course, being another one of these names that has kind of shown the marketplace of late that IPOs come with some downsides to them. And perhaps they're not the most attractive way to raise capital. A lot of these firms choosing to go private. As we saw Dell closing at 14 even today, going into the private realm. People talking about Best Buy, Barnes & Noble, and others following suit. I think Groupon has been a cautionary tale. Twitter.
How about Twitter?
Have they made $1 yet? Twitter? I mean, all this.
I don't think they're profitable yet, but I think they're paying their bills though. I think those guys are gonna hold on to that one for a while.
They've had, talk about revolving doors at the top. They've kicked out guys and other guys have come back, and there's founders and co-founders. It's the most ridiculous revolving executive door up there. They still can't figure out, how to take this very ubiquitous now Web 2.0 service and try to turn it into something that actually makes money. Because anything you do that makes money on Twitter diminishes the value to someone out there for using it. And of course, they've already killed things like StockTwits and others because they've totally restructured the APIs. StockTwits, for example, no longer can pull the $ stock symbol from the tweets because it was just the API thing. Restrictions were just too onerous for them.
Really?
So that pretty much kills them. I mean, I don't know what utility they have anymore. So of course that's the downside of building your business on top of someone else's business. You're at their mercy and whim. And if we've seen anything like that with Zynga and StockTwits and others, if you build your entire business on someone else's platform, Facebook, Twitter, what have you, and you don't control it, you're at their mercy at the end of the day, and that could not exactly be an ideal thing.
No, it's not.
Speaking of not ideal things, I think it's time to wrap up the trading block and roll into some perhaps less than ideal, but still very interesting, unusual names in the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, and that funky tune means that it is time once again for the Odd Block. Andrew and I have put on our fedoras, and we are suitably garbed to dive into the skid row of the options market. And we're going to kick things off today with everyone's favorite name, good old Bridgepoint Education, ticker symbol BPI. I know I can't start my day without checking what's going on in BPI. So a big name. I know a lot of you are really glued to this one. They closed today at $9.88, down about 34 cents or about 3% or so on the day. It's a relatively light name, usually does about 700 contracts a day, doing over 13,000 today, with the bulk of that coming in some pretty sizable risk reversals. And these seem to really have caught your eye today, Senior Andrew.
They did, because I follow the education stocks because I'm sort of been waiting for a bottom in them. As one of my clients keeps telling me, he's like, the bottom's not here yet. And he seems to be right. So, but this is a client, I think, or not a client, but a customer who actually rolled a risk reversal. So it looked like they had on the May 10-12 risk reversal buying put. They were long the put and short the call. And today they unwound that trade. So it looked like that risk reversal traded on the bid. So they actually sold out the May put and bought the 12.5 calls back. Then they went out and they rolled it to August by buying put and selling call there. And this trade went up as a buy right. So that to me implies that there's some stock associated with it in some way, shape, or form. So, and BPI is again one of these stocks that are trading, pretty close to its 52-week lows. They've probably been rolling these things out, so they can hold on to the comment and, they're not done yet. So I would not say it's a rousing vote of confidence in the education stocks, at least from this particular customer. So
looking at this one over the past 6 months, this is kind of a Microsoft-esque chart, and that is relatively stable. It's, it got danced around in the 8.5 range for a while, but pretty much it's been vacillating around the 10 handle for quite a while now. A pretty stable trade, not one you need to run off and just put on a bearish risk reversal on right away unless you're really worried about some near-term downside or something else going on out here. Of course, he did it with some stock, so that changes the equation a wee bit.
Yeah, and it sounds like they got in kind of at the bottom. That's what it feels like, because it used to be a $20 name until until the whole earnings sector just basically took an 80% haircut, really. The whole education sector, this online education thing. So.
Yeah, we've been big fans here of the online educators in the odd block because they seem to light up the tape quite a bit lately with some bizarre and dubious. DeVry has been on a number of times. It's just one of those.
ITT.
Yeah, ITT. You're right. And I know you have a special interest as an educator yourself. So
yes.
It definitely has maybe a bit of a Schadenfreude for you, if you will.
It does. It is like, well, Mark and I are not going public just yet.
Yes,
but,
that's true.
One of these days, you never know.
Next up. In the odd block, I think we have to give this the odd block award for the most incongruous name versus ticker symbol. I just love this. This is, of course, Zhongpin Inc. And when you think Zhongpin Inc., you think HOGS. That's just what it is. So, of course, their ticker symbol is HOGS. I just love this. This whole thing just cracks me up. HOGS, HOGS, for Zhongpin Inc. If you're wondering what the hell Zhongpin Inc. is, they are a holding company that does meat and food processing. So, I'm guessing a lot of pork is in there, aka HOGS. But
there is a ton of pork.
Still an interesting one. They do about 800 contracts a day. They did nearly 2,000 today, closing at about $12.75, down about fractionally on the day overall, but looks like there was some upside call volume that really attracted our interest today.
Yeah, this one I think there is a proposed takeover or something, so there's something funky going on in it, but they're buying the June 12.5 calls, and I'm trying to figure out why, and to me, it looked like opening paper, so I can't quite figure out, was this somebody covering what the deal was? The open interest on the strike is pretty heavy. So, I'm not quite sure why the customer was buying these after there's a potential merger already. So, I couldn't quite figure this one out, to be honest. So
maybe he had been blasting out a ton, thinking it wasn't going to happen, and now he's taking some off the books. Or
I think that's possible. I mean, just because it's had the heavy open interest, I don't see how there could be two. It doesn't sound like two different players after the deal, so to speak. So. Yeah, that's what I think. That's what I think anyway. So, the guy's he's either bullish or he's covering. And I don't know how bullish he's going to get into the trade. So, I'd have to look into the terms of the deal. Maybe HOGS becomes, if it's a stock transfer or something, maybe the person will pick up, the acquiring company or something like that. So
this thing was announced back in November around their earnings, and the stock shot up instantly from around the 10.5 level up to about 12.5, where the deal was apparently supposed to go. It since has slowly rallied a bit to 12.75. But you're right, it is kind of odd to see someone, with this much open interest on this strike on a name that clearly has a corporate action looming on it, to be doing these kind of, these are now at the money calls, to be either closing these out, these shorts, or doubling down on what they think is going to happen, thinking that the deal, these are relatively meaty. These are 70 cents. So you really need to think that this deal, you need to think this deal is really not going to happen at the current price to be loading up on these things.
Yeah, so that's what I'm like. So, meat and food processing, I still think those are industry-wide or are still, I like that globally. So that's what this particular, again, a weird one, as soon as those volatilities get real low, realized vol gets super low, but somebody's out buying calls, I'd like to, I like to understand why just a little bit more.
Any listeners out there might say, 1,000 calls, who cares? But look at the big news story of the past couple of weeks with Heinz And that was only a few hundred contracts, if I recall. So these insider trades go up in all kinds of crazy volumes. And 1,000, and particularly a name that does 700 a day, that's a lot of paper. So that's certainly worthy of the unusual moniker at the very least. Speaking of unusual...
Maybe they will call that, we'll rate them from 1 to 3 fedoras. That's like a 2.5.
I like that. There we go. We have a new scale. Maybe we'll go to 5 to give us a little bit more granularity.
Exactly. Give us some room.
Give us some wiggle room. 1 to 5. I'll give that about a 3.2 fedoras. Speaking of unusual, this is a good one, just in terms of names. Tronox Limited. another odd block special here. I love this one. Ticker symbol TROX.
Junk for you today.
This is quality. I love this one. This is, of course, a what the heck did they produce and market titanium. That's a big market. If you're marketing titanium, hey, this is the best metal ever. Come buy it.
Golf clubs and airplanes.
That's a busy market right there. Buy titanium. It's fantastic. This is another name, not exactly lighting up the tape. Usually doing about south of 1,000 contracts a day, about 800. Closing today up about 3% to $20.98, and doing about 6,000 contracts. Again with the calls. What's with the upside call love these days? Yeah,
and that's what I guess to me that was the most. I don't know if a lot of this paper was follow-on paper after they traded, but it looked pretty. Just good old-fashioned buying of paper. There's a dividend, but not. I don't think these aren't dividend play options, obviously.
No, these are out-of-the-money calls. If they're doing div plays with these, then they're doing something way, way wrong.
They haven't taken any of our classes. Let's just put it that way. And not listen to this radio program at all. But it was a pretty good chunk of paper. When I wrote this, there was 2,700 traded. By the end of the day, it was 4,300. So the stock is trading actually in the middle to low end of its 52-week range. Titanium is a funky rare earth element, sort of maybe. But again, I'd say a substantial buyer, a bullish buyer. The volatility is about fair. But they did manage to bounce the volatility up a little bit. So, but I mean, you're buying out of the money calls. And, from our point of view, you always know how hard a road that is to climb. But a pretty bullish looking paper as far as I can tell.
It's like you might have rolled some of them from the March 20s out to April 22 halves as well. About 1,300, the March 20s went up today as well on some open interest, about 2,300. And a lot of them, about 750 to 1,000, went up as a spread. So I'm assuming the other half of that went up in that. It's nowhere else to go, really, except for those April 22 halves. But you're right. This is some pretty, looks like on the surface of it, some relatively near-term, very bullish paper. Uncle Mike, I know you're Mr. Metals here on the show. I don't know if you dabble in titanium too much. Have you ever thought about getting into the titanium lands?
Thought about it on several occasions, but still sticking to the basics for right now in gold and silver.
So this isn't you gobbling up upside in TROX?
No, I am not. I'm not hot to TROX.
There you go. See? You've been on the show for a while. You're getting very punny in your old age here.
I get off a good one every now and then.
Tell you what, Andrew, we'll wrap it up with one more very interesting and or unique one. Certainly a quality naming odd block today, if nothing else. Last up, I should say, in the odd block today is Mitek Systems Inc., ticker symbol MITK. This is another name that usually doesn't light up the tape too much, trading about 300 to 400 contracts a day, doing about 2,500 on the day today, and that's, of course, on some price activity of stock closing down about closing at $4.12, down about 2.5% on the day today. And in keeping with the spirit of our odd block today, once again, we have some call activity in good old Mitek Systems. Take it away, Andrew.
Yeah, I had a seller today early on of the April 2.5 calls. Their open interest on the calls was 23.50, and they basically just whacked them out. It looked like they basically, I think somebody either not being able to sell stock or something of that nature, and they just kind of hit the bid on chunks until they were all done with their volume. And I'm also seeing some funky stuff from volume after the close, because the volume is different than what I was seeing during the day too, because I'm just looking at Live Vol Pro here. But it was definitely trading today, and I saw open interest of 23.50 this morning on this bad boy. So, a real just bizarro, kind of a bizarro trade. somebody bailing out on some in the money calls, essentially. So I don't know if this is, they think the stock's going down, but it's definitely, what is it? I think it's about 70% off its highs for the year. I think that's not even an exaggeration. Let's see. High of the year on the stock was 5.0. Oh, it's only down 20%. Which one I was thinking of? Oh, Tronox, that was one. Or TROX. But this is down about $1.
If this guy bought these calls back in November, then these they were out of the money then. This thing has really rallied since then. So it could be, it was trading trading about 205 back in November. So
yeah, I got this one confused with the one before it.
He could have been specking to the upside and now just taking some
taking
size money off the table. There we go.
So Mitel Networks Corp.
Mitek.
Oh, it's MI. You know what? I'm looking at the wrong one. MI. No wonder why.
Your own activity is confusing you, sir.
My own activity. I'm like, what's going on here? This isn't the name that I remember.
If you want to clear up your confusion, listeners, and want to learn more about any of these or any other names that we're talking about here on the old odd block, then by all means surf on over to theoptionsinsider.com. You can find much more detail on all these alerts, as well as a bunch of other alerts we didn't get to on the show today. And if indeed this segment of the show piques your curiosity, then you really have to show up in Chicago, March 27th. Be there or be square, $99. We're going to line up a bunch of panels, a bunch of great experts. We're really going to get into how we at the Options Insider find and analyze and highlight this stuff for you, the reader, and then what you can do with it. Once you find it, probably going to give you a bunch of great free tools and access to a bunch of cool stuff. Don't tell anybody. That's all secret stuff still to come, but it's going to be a lot of great stuff. We're even going to throw in a floor tour. So if you want to see where the VIX and SPX and all these great products trade before those pits go away, then now is your time. Get on over there to theoptionsinsider.com/events and register today. We mean it when we say the space is very limited. All right. And with that, we're going to keep on rolling right into the Xpress Block.
The Xpress Block, brought to you by Options Express. Options Express lets you trade where and when you want for every level of trading. From advanced charting, free daily trading ideas, and free educational resources, Options Express is the online broker for all traders. Best of all, Options Express allows you to trade stocks, options, and futures all in a single account on powerful yet easy-to-use trading platforms, including mobile devices. Visit optionsexpress.com/OXradio for your free account. Options Express is a member of FINRA, SIPC, and NFA.
And listeners, if you've been listening for any time, then you know this is the portion of the show where I hand things over to that watch collector extraordinaire known to many and sundry as the Viceroy. Mr. Alex Jacobson, take it away, sir.
You realize now people are just going to stop me and ask me what time it is.
You've made your own bed, sir. Now you must lie in it.
Yes, I did. Relatively quiet day today on the options side of the desk. Most of the chatter related to finding a bottom in Apple and premium selling in Facebook. And as we said before, when will Google get to 1,000? So that was where most of the chatter was today. We did put into production our new trading patterns product, and I know I've touched on this once, but I'll touch on it again. The cool thing about trading patterns is if you are trading a name, you can see two things. You can see what other people trading in the options market, what strategies they were employing in the name. So if you're looking at one of the odd block ideas or you're pulling something off Bloomberg or CNBC, you can get a sense of what strategies are the most popular in that name. You can also see the other instruments that people are trading alongside you, and that's both on the securities side and on the futures side. So, it's probably not a big surprise that when you look at something like spiders, you're going to see a lot of business being done in the E-mini and things of that nature. But for example, in spiders today, people who were trading spiders were also trading a great deal of the March 2013 yen contract. So it's interesting price discovery. And that's new. It's released. It's up in the toolbar.
No, I was going to say, is that a typical correlation you guys see at OX a lot, the spider-yen combo?
I've just begun looking at it, so I'm not sure. generally what you see with the spider is what you'd expect: Facebook, Apple, things of that nature. But today, looking at the spider, it was the third most correlated instrument was the March yen contract. So very curious. I will look at it more and talk about it more in some of the later shows. But we released the enhanced product into production a couple days ago, and I'll start to talk about it on shows. The other thing, as I pointed out, is the premium harvesting side of futures options. The first 4 symbols have been kind of locked up. They are the S&P E-mini, the NASDAQ E-mini, the COMEX light crude, and the NYMEX gold contracts. So those are going to the product development team. And hopefully we will see those in one of these near-term builds going in here at OX. And as we get closer, I'll talk more about those. But on the security side, quiet day today. Futures option side, since we've introduced the new pricing, those guys are busy as all get out.
Thank you for that, Mr. Viceroy. You may now return to winding your watch fobs and checking your pocket watches until you are needed again at the end of the show. But now, without further ado, we're going to keep on rolling and roll right on into the strategy block.
The strategy block.
And as I often say myself when I get to this portion of the show, what is Uncle Mike Tosaw going to talk about today in the strategy block? And Uncle Mike, I know I always have my birdies out spying on you and your offices out there in St. Charles, Illinois. And today they've reported back that they think, they're not sure, but they think that you're going to take some time to elaborate on what we discussed a few shows back, the credit spreads with benefits, right around Valentine's Day, if you remember, listeners, and take that concept and maybe take it up a notch, take it to the next level. So what say you, sir? Have my birdies earn their keep for today?
I would say that they have for sure. I think they've been wrong once in about 3.5 years, and that's a pretty good record. And the thing that they were wrong about, it's not like a condor trader that tries to do those 99% probability condors and being once in 4 years wipes them out. The birdies really weren't that far off. So
I take my time picking my birdies, let me just say.
I tell you, you do. Yeah, the credit spread with benefits. I want to just kind of elaborate on that a little bit, because volatility is starting to come down a little bit right now, and typically my preference is to go more towards a calendar spread type of spread arsenal, if you will, when volatility is at lower levels, just because of the fact that I don't like being quite as vertical. If you're too vertical when vol's low, it might make you horizontal literally by killing you. But anyway, I guess you could go a lot of ways with that. So with that in mind, a couple days ago, a client of mine and I were talking on the phone about possibly doing something with a certain stock. I don't even recall what the stock was off the top of my head, but we were talking about possibly doing something along the lines of my famed credit spread with benefits, so to speak. And we were looking at it, and ultimately we were bullish on the stock. And so we decided against it because of the fact that the credit spread with benefits is something that's typically more along the lines of a neutral style strategy where you're trying to capture theta. So just a quick review on what it is. Let's say XYZ stock is trading at $53 a share, and you're a little bit maybe slightly bullish on it, but not too bullish on it. One thing with which you can take a look at is selling a 50 put on it, maybe 1 to 2 weeks out, and then perhaps buying a 1 month 45 put on it. And what that does is that'll hopefully create, or the goal of that strategy is to create some time decay. And by creating the time decay, it's similar to, you might be saying, well, why not just do a credit spread on that? Well, or a vertical credit spread on it. Why is this credit spread with benefits? What are the benefits with which it gives you? Well, the benefits it gives you is that, number one, should XYZ stock go down, with these new multi-week options that exist on it, you have the ability to roll from a 1-week option to a 2-week option, or a 2-week to a 3-week, whatever the case may be, should XYZ stock start to go against you. You have more choices, and you have the ability to adjust should it go wrong. Now, with that, what if XYZ stock stays the same? Well, ultimately, that should be your goal on this one. Maybe have it go up a little bit if you're slightly bullish on it. But ultimately, remember, this is a neutral trade. You're trying to collect theta on it. Because if the stock goes up too much, unless you got some type of a credit for that trade, which you may have, typically I like to do them for around even money. Unless you get some type of a credit for that trade, you're going to lose on the trade, or you're going to just make no money, one of the two. So as it goes higher, you have to have some type of an adjustment to the upside. Perhaps you're going to roll up your short put. Perhaps you're going to get out of it, or perhaps you're maybe going to create a call spread. I don't know. There's a whole myriad of adjustments with which you can do. Now, if it goes down, you have the choices to roll to another week. If it stays the same, you just sit there and look like a genius because of the fact that you were smart enough to do this delta neutral trade when the market was going to stay the same, which of course you were able to predict. But what's the plan if it goes up? Are you going to create another spread? Are you going to roll up? There's a lot of different things with which I like to do. But what I would encourage you to do is have a plan, as always, if the stock goes up, if the stock goes down, or if the stock stays the same. The main benefit, and the reason that I'm talking about these right now, is because of the fact that we now have multi-week options to where you can make adjustments and you can have a way of bailing out, so to speak, in case you are wrong. And that is one to grow on.
All right. Thank you, Uncle Mike. You may now also return your smoking jacket to its proper hanging place and put out the fire until next you are called upon by my birdies to strategize for our listeners. And we are going to keep rolling on with the show to our final segment, Around the Block.
Around the Block.
All right, and for those new listeners just tuning in, those car horns mean that it's time for our final segment, Around the Block. This is, of course, where we tell you what we're watching on our trading screens and what we're keeping an eye on for the coming trading sessions. And, of course, as we hit upon at the top of the show, we're in one of those very weird times. Normally, this is the part of the show we talk to you about earnings, we talk to you about volatility in a particular name, maybe some economic indicators coming up. But most of that really seems to be trumped by non-fundamental factors right now, not even technical factors. It's that old Washington wild card, and that's really one of those things that's kind of hard to predict and also kind of hard to trade around, which is why we've seen a lot of people kind of taking their ball and going home somewhat. Alex has been talking about how it's been kind of quiet over at OX. A lot of people waiting to see how this sequester really plays out before they're starting to put on some aggressive positions. Of course, we talked quite a bit on recent shows about maybe some upside pops in VIX. That was primarily due to people probably getting caught in a vol squeeze, trying to take off some of their positions in VIX. VIX cash selling off about $1.35 overall today as we're talking about it. So a little bit of a sell-off in VIX and a little bit of sell-off in vol overall as the market rallies, but really not too much going on. Everyone kind of playing the wait-and-see game. I know, Andrew, we talked at the top of the show here about maybe putting on some downside in Apple. I think you think it's a little bit too cheap to be selling, and perhaps this is a buying opportunity for you to do some stuff and buy some juice out in Apple. Are you looking at that at all? Are you fixated on Groupon? What is catching your eye aside from those very, very silly names we discussed in the odd block?
Yes. Apple, I have to be honest, it's a little, we just closed a short put spread in there. It just hit our actual limit. I don't know what's going on in that stock. So it's too weird, and I don't think it's any kind of a naked trade stock. I don't know. I just feel like it's in a no man's land. So I'm staying away from it till it's not. And one way or the other, has anything really changed for Apple except for the fact that all the people that used to buy it are now selling it? So I'm kind of it has never been big enough for us, at least for what we do trading, except occasionally when the options get interesting. But yeah, we are looking at VIX, we are looking at VXX, and it's amazing how a lot of there's been the compression in those The volatility products, I would just say, is surprising. So there's sometimes when things are kind of moving in an odd, I think a slightly odd direction, that I kind of sit back and wait a little bit. I have to admit this FX, the Chinese thing is a little interesting to me. The fact that the markets is down for the year now, and why Alex alluded to something, maybe all the Chinese are stopped buying, or I don't know, but the volatility in there actually as a risk premium is relatively high for that index. It's actually one of the higher ETFs over implied vol over realized vol that I look at. So it's kind of a slow mover anyway, but it hasn't recently, mostly just because it fell out of bed. But as I look at it, actually, as for a big market index, it's one of the more expensive implied volatilities over realized.
There you go, listeners. We like to talk about the implied versus realized differential. There is an example of that in action for your listening pleasure.
You got it.
A lot of our premium sellers like to hear that kind of stuff. Music to their ears. So perhaps check that one out if you're intrigued by what Andrew and what we've been talking about here on the show quite a bit. Speaking of talking about on the show, or should I say perhaps not talking about, I know one of your recent holdings, Uncle Mike, we didn't get a chance to talk about. It rallied a bit again today, 1%. Of course, Ford retracing back to the upside. Looks like those 12 puts are safe. So what's the gambit going forward here? Keep rolling on the 12 strike, going up to 13. What's the RCM dance for Ford going forward?
The dance. Well, I don't know if we call it. The 12s we're flat right now, but looking to get back in. I'm going to lay low this week. I don't necessarily think this rally concerns me in that, kind of like what Andrew said with what's going on in China, and I'm not ready to go becoming a very aggressive buyer right now, so I'll probably lay low the rest of this week and maybe even next week as well. We'll see how things go. I'll be monitoring the markets throughout the week, obviously, but I want to get back. If Ford drops again, I'd like to see Ford drop again a little bit more, and then I'd like to get into the 12 puts.
You degenerate turtle, you, keeping that head safe and keeping your head above water and not doing stuff when things are active. That is definitely your MO, and usually a pretty wise one for the most part. But yeah, interesting stuff going on. Ford, of course, retracing to the upside, and a lot of interesting activity in Ford trading, closing today at $12.75. So we'll see how the RCM dance unfolds going forward.
It's the safety dance. You remember that song in the 80s, the safety dance? Sebastian would be proud of me for that.
He would be very proud of you for that one. Mr. Alex, what, if anything, is catching your eye in these market conditions, sir?
To your point, macroeconomics. There isn't much on the earnings calendar that really piques a lot of interest. Volumes are low, volatility. We've talked about the relationship between realized and implied here. I'm one of those people who believes that as volatility gets lower, the market is setting up for something, and I still think that's the case. I suspect, barring our fine elected officials in Washington doing something incredibly bonehead, which they are fully capable of doing, I think we'll see VIX back down into the 12, maybe 11 area. And then I think at that point, this market is either going to take off and we'd see a buying panic, so to speak, with folks who've been out of it. But it's all macroeconomic at this point.
Yes, it's got that little factor, that Washington factor that makes guys like Uncle Mike sit on their hands and other guys kind of stroke their chins and say, and wonder really what the heck is going on, because it's kind of hard to predict those wackos down in Washington and what they're going to actually do with the sequester and what's going to come out of it. So a lot of people playing that wait-and-see game. Uncle Mike is certainly...
Are we sequestered? Are we sequestered, Mark? We're fully sequestered now, right?
I believe so, yes.
The sequester is on.
I love how this term is getting bandied about like it's some sort of normal. Oh, yes, we're sequestering. I've seen all kinds of variations on it. We're sequestered. I'm sequestering. I'm going to sequester tomorrow.
Can we sequester Congress?
Yes, there we go. And maybe just as we're doing that, just lock them up and send them away and just replace them all and see what we can do there. I know that's getting into the realm of politics, so perhaps before we get down that road, we'll just shut the whole thing down and wrap up the show. But before we go, as I am wont to do, I like to check in with my cohorts, my partners in crime, the yins to my yang, if you will. to see what they have going on in their collective necks of the woods. Before we do that, really quick, I want to remind you one last time, theoptionsinsider.com/events for the Options Insider Unusual Activity Forum Chicago. If you're going to be in Chicago March 27th, be there or be square. We're going to have a lot of great guests, a lot of great experts, really diving deep. If you thought what we did today was deep, this is going to be 10 times deeper. This is going to be really hardcore, exponentially deeper, if you will, into the realm of unusual activity, how you find it, what tools, what tips, what techniques you use to actually find the valuable stuff versus the useless garbage. Separate the wheat from the chaff, if you will. And then once you find it, what do you do with it? What's some of the best ways you can really implement that in your trading? What are some of the tips, the techniques, the tricks, the things to watch out for? All the things that the pros have used for years and that retail tends to watch for and wants to learn about when they're trading their unusual activity. So March 27th at the CBOE, theoptionsinsider.com/events. All of that and more for $99. A great deal, if you ask me. And of course, you did. And now, what is coming up in the land of RCM, Mr. Mike Tosaw?
Webinar train's taking a break this week, but next week we'll be up and running for the next 3 weeks in a row. We have software-based trading, with which we'll be discussing next week. The week after that, we're talking about oil. And then the week after that, we're going to be talking a little bit of trading psychology. So stay tuned. Thursday night trading, TNT, will be in full swing again next week. And we're excited about everything that we have going on.
We can't get our webinar fixed this week, but there might be something fun going on in the OX neck of the woods. Try saying that 5 times fast. Mr. Alex, you hinted at some stuff at the top of the show. What is coming up in the OX webinar land? I think our listeners might even be able to meet the Viceroy himself.
Yes, this Saturday we'll be at the Westin in Lombard. Registration begins at 8 a.m. The seminar begins at 9, being given by Jim Ruzan, who used to run a book over at Group 1. That's an all-day.
Sorry, that was his acronym in the day.
Yeah, you guys worked together, didn't you?
He was actually one of my students.
That's not the way he tells it. But anyway, March 9th at Westin Lombard. March 23rd, they'll be at the San Francisco Airport, also at the Westin in Millbrae. Both live events, but they are also simulcast live on their site. And if you really are jonesing for a webinar tomorrow at 3:30, I'll be doing the Ideas Hub, and I suspect I'll be doing it from Casa Jacobson if the weather is bad. And the first time I did one from home, I made the comment that I had put a blanket over the chiming clocks, and I'd put the dog out so that there wouldn't be any noise. And I got lots of emails from people say, bring the dog back in. They alleged me of animal cruelty. Of course, the dog had not been put out, but
all those diehard animal supporters in the OX audience.
Yeah. But I come back, I want to be my dog.
So there you go, listeners. If you want to get your webinar fix for the week, you can surf on over to optionsexpress.com. Click on that education tab. You'll see the link to all the webinars there. And you could listen to Mr. Jacobson yourself live and from the comfort and safety of his own home during our inclement weather here in Chicago. And you too can learn how to use the Idea Hub. So optionsexpress.com. Check it out for Mr. Jacobson. And last but certainly not least, we have the boys over at optionpit.com. They too will be present at our event on March 27th. So in addition to our unusual activity forum, Mr. Andrew, what is coming up in the land of the pit?
Well, we have an event. Actually, I know the date. We have a couple. March 21st, Mark is going to do or maybe I will, I don't know yet. One of the two of us, a seminar on trading covered calls. Hint, hint, the key is the stock is not supposed to go down very much. Number 2, April 20th, Mark will be in New York City for a trading the VIX or watching the VIX and actually using it to help, help day trading or help with, basically just market direction. There are good times to look at it and bad times, and Mark will be happy to enlighten you as to the difference between the two. And those are our biggies. Those are our real biggies.
He's never shy to enlighten a listener about something or other.
Yes.
So, thank you for that, Andrew. And thanks to all of you in the listening audience for downloading and streaming and subscribing to this program and making it such a success. Of course, you can now find us on TuneIn. We've been their featured business content partner for the past week or so. It's been fantastic to work with those guys. You can also find us, if not now, very shortly on AHA Mobile. So that's, of course, in all your in-car audio systems, Harman and whatnot, all those different in-dash systems. You can find us there as well. Of course, TuneIn means you can get us on all the different mobile devices. A lot of great new ways to get in touch and listen to the Options Insider Radio Network, in addition to our website and iTunes and, of course, Stitcher and all the other ways we have. So we're constantly expanding the ways for you to come in and find this great content. So we hope you enjoy and listening to it, because we're finding new ways to bring it to you. And on behalf of all of us here on the Option Block panel, I want to thank all of you in the listening audience for downloading and streaming and subscribing to this program. And we'll see you next time right here on the Option Block.
Become a part of the Option Block. Just visit www.theoptionsinsider.com/forum to post a question for the hosts. You can also submit questions to twitter.com/optionblock or leave a voicemail at 312-544-9356. Make it interesting, and your question just might make it on the air. The Options Block is property of the Options Insider Incorporated. All rights reserved. The preceding program was a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com/radio or search for Options Insider Radio in iTunes.